Hey traders, welcome to the Strategy Lab video. My name is Alexander Nikitin, and in today's video I will continue my market research on Cipher advanced formations and unified Gartleys. Okay, we should first agree about the rules. As for the identification part, the ciphers and unified Gartleys are found by MPS5 pattern recognition software, so we simply need to enable them with price extreme algorithms. If you are interested in details of the algorithms, the period of price extreme is 20, highest, lowest low of 20, period mode is high low. If we go to pattern settings, then the stop loss Fibonacci 113, it is your Cipher stop fibs 113, and for unified Gartley it is coded as a custom pattern here, custom Gartley here. We have this settings for the B point, extension false, C point, completion, and the invalidation or stop loss level at 113. Okay, these are the identification of the trading setup. The next is the trade execution. It is very important, and in today's video I will show you this execution. Here's the drawing tool. For example, this is the pattern. Let me draw it. Okay, it looks like butterfly. Let it look like Gartley. Here's the potential reversal zone from here to here, somewhere here. So what I'm looking at is this green candles. So I'm looking at these green candles. They should become smaller and smaller and smaller. Not the candles themselves, but the body of the candles. They should become smaller, and then I should see a trend to the downside. So basically it is two red candles to the downside. Okay, they symbolize the trend, because if you go to minor time frames and you will look at the price action of the candles, you will notice that it moves this way, then it moves higher, and then it moves this way. So this zigzagging movement is vital for a downtrend to install. You should have a lower low and a lower high. So whenever we have this kind of lower 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 high, it doesn't matter if we have bearish candles or we have bullish candles, they should give us a lower low. But we should remember that bearish candles move from top to down and bull candles move from down to top. So when we draw them, we should keep it this way, like this. Okay, hope you understood that. After this happens, we need to execute the trade at the 50% retracement. For example, we have these two candles like this. This is initial thrust to the downside, what looks like a minor trend on lower time frames. So we stretch the fibs. Okay, so we stretch the fibs, and the 50% is our entry. It is this one. So wait for a pullback and place a limit order to execute at 50%. After that, price should accelerate to the downside. Okay, when this low is broken, a primary trend line is drawn. Exit when you have this primary trend line violated. Okay, this low may not be broken, it may be tested. What it means when I say tested, it means that price hits at least the lowest close of this candle, but it may not hit the wick of this candle, like this. It hits the lowest close of the candle, but it may not hit the wick. this is called a test, so it may be slightly higher. In this case, I also draw a primary trend line. Okay, so after we have that primary trend line, we then should accelerate, as I told you. So let me draw it not this way, this way. We should accelerate like this. So the primary trend line says this, yes, and the accelerated trend line should be drawn from here to here to mark the price action. Basically, it is 3, 4, 5 candles. It is micro trend line that unites the highs of some candles, and we should exit on the break of that accelerated trend line somewhere here at with profits. Okay, what else? Also, the stop loss should be always trailed with this 3 ATR method. So right now it looks this way: 1 ATR, 2 ATR, 3 ATR, and to the downside 1, 2, 3 ATR. As soon as we have that first ATR hit, we cut our stop by 1 ATR. When we have second ATR hit, we cut our stop by another ATR. When the third ATR is hit, we cut our stop by another ATR. So it is a trailing 3 ATR trailing method. In majority of cases, we will exit at trendline breaks, either accelerated one or a primary one, and the stop loss only is triggered when we have that worst case scenario and price reverses sharply and moves against us. It is simply the protection. Okay, what else? I think that's it. The rest of the rules that maybe I forgot to say will be revealed during the practice that we are going to do right now, finding multiple number of setups. I prepared my Excel spreadsheet, so my chart stop loss will be always 3 ATR as initial stop loss 3 ATR, and chart profit will be also typed here, so in case if I wish to know the initial risk to reward, I can compare the chart stop loss and chart take profit, and the result that we have will be here. It may be a stop loss, it may be a take profit, or it may be something different and neither stop nor take profit, but a break of the trend line or any other reason to close the position, for example, and it can be different. And here we have the results that are calculated as chart result. What we have minus spread, and the spread is 0. Okay, so let me make it empty because the chart okay, so the chart right now looks this way. We have -1. It is a predefined because we already detracted one spread. Let us start. Here's the Cipher pattern, Cipher Advanced Formation, and what happens here? We completed this candle, then we have an inside bar, and then we have a lower low. It is not good. For a bull trend to install, we need higher highs followed by higher lows. So no here, then nothing here. We continue installing lower lows, and then potential bull trend is here. So we have initial low, initial high, then we have a kind of retracement, and then we have another high that is higher than our initial high. So totally this movement is a bull trend on minor time frames. So we stretch our Fibonacci. Let me zoom it even more, and let me place horizontal line to mark 50%. Okay, now I delete the Fibonacci, and look what happens. Next candle executes the trade. So what I do, I just mark the 3 ATR distance to measure stop loss and take profit. So what happens next? Price simply goes against, and it tries to move to the upside. It does not violate our initial high, so that's why we don't plot any trend lines. It moves even lower and lower, and finally hits our stop loss. So, and potentially our take profit could be as big as this one. Maximal take profit could be. Okay, let me calculate it from this old place. It could be 76.3. 76.3, but if we do some target adjustment, of course it becomes less. So what we have is the stop loss, and the first trade is minus 36.10. One spread is detracted. Done. Yes, I think that's it. We entered here, exited here. The next pattern is this unified Gartley. So what we need to do is to measure our entry. Okay, we have it. Then we need to find some minor uptrend to the upside, if any. Two green candles give us enough evidence for an uptrend, and then we just wait for a pullback. So 50% pullback, no. Then go higher. Do we have 50% pullback? No. Going even higher, have 50% pullback? No, we roughly hit that. And then we go higher, 50% pullback? No. And then we exceed 618. 618 is our target, so it makes no sense to further look for the pullback to enter that, because the target's already hit. So it was sharp reversal, the so-called sharp reversal. Okay, another pattern is this unified Gartley. So let us zoom it here. What we have is this price action. It is very simple. When we have two red candles, most likely it is a downtrend. Of course, the second candle should have a lower low below the previous one, so we have lower highs and we have lower lows. So the first lower low is at this candle. Wait for candles to close. Before you can judge that, you should wait for candles to close. Okay, so what we do, we stretch our fibs. So when this candle closed, we do not have this candle yet, but these three tells us about a downtrend on minor time frame. And look at this next candle. It opens and it triggers our entry. When we are in our trade, we should apply our ATR. So what happens next? The next candle breaks this low, breaks our low, and after it closes, we should plot our accelerated, not primary trend line. Okay, what we have next is this kind of situation. The body of this candle is smaller than the next body of a green candle. This means that we have a momentum expanding to the upside, and the next candle supports that previous momentum. We break and close above the trend line. Okay, although this candle looks small, but it is a continuation of previous one. That's why it is advisable to exit here. And what we have zero on this trade. Okay, and what could be our target? The target could be 618. It is 79.5, 79.5, and the chart result was 0, and I type in 0 as well. This should be 0. Okay, 79.5. Let's continue. After being stopped out and when price exceeds our initial high, we can have additional entry if we do not violate our initial pattern invalidation level. So it says this. Obviously we have this downtrend zigzagging movement. We stretch our Fibonacci to find 50% of that downtrend. We just move the entry higher at this level. Yes, then we delete this stuff, and let us see what happens after this. We need first install our ATR. Okay, we first moved lower. No, it was the first movement. After this we went to the upside, yes, and then need to stretch Fibonacci, by the way. Then we go lower, lower and lower, and finally violate our initial low of our downtrend, and at the same time we violate 1 ATR. We reach that 1 ATR. That's why we make our stop loss less, because our trend, our previous low was violated to the downside. We need to stretch our Fibonacci. What was the candle that first closed after that? I think it was this way. And we should exit at the first bullish close above the trend line. But you should keep in mind the overall situation. Sometimes we close above the trend line and then immediately we close back below the trend line, and this is kind of test. Sometimes you simply need to read the previous price action. So what we have here is this bearish candle, then we have a smaller body, indecision plus inside bar, and then we have a body that engulfs the previous one. It is an outside bar and a bull close here. So not only the fact that it closes above the trend line, but the combination of that outside bar plus inside bar and plus close above the trend line is the signal for closing the position. Okay, so if position is closed here, we have 8.3 pips profit. If we do not close it, price goes here and hits our stop loss. 8.3 profit. 8.3. And if we go to measure our initial take profit, we could have 91.8. 91.8. Okay, let us continue. So what else do we have? After we exceed our top, we then also invalidate the pattern. So the rest of price action is invalidated pattern. Another pattern that is next to the unified godly is this Cipher advanced formation, and let us see what happens here. What we do first, we move all the way to the upside. Then we have two red candles. Two red candles is enough. If these red candles have lower lows and lower highs, it is enough to symbolize a downtrend on minor time frame. So we just stretch this, enable this 50%. Okay, place our stops and wait for this low to be violated. So after testing our entry, we then go hit our first ATR. That's why we cut our loss by 1 ATR. Then we break our low, and that's why we draw a trend line, primary trend line is connecting these 2 points. We don't have this yet, connecting this, and then we go even lower, almost hit the second ADR, but we didn't. After that, we test our trend line. We do not close. If this big bull candle closed above it, would be obvious violation, but we reject it. We didn't have any follow through. If next candle would be closing above, then it would be a continuation. Then we go lower, and it is this when we hit our second ATR. That's why we cut our stop loss by one more ATR. After that we go lower. We almost hit third ATR, but we didn't. Okay, so this candle close, it is just at the trend line, just barely at the trend line, and it is not enough. If we look at the previous price action, it is not enough to violate the trend line. Only the top of the candle range is above the trend line, not the middle middle point. And what we have immediate rejection, and we cannot continue lower. We do not violate these lows. Yes, we cannot continue lower. We simply test these lows. This is what I was talking about, the low of this candle testing the lowest close, but in this case we do not exceed the previous lows, but it is enough to hit the price of previous close, but not enough to hit the price of previous low. Okay, this is a test, and we then go to the upside and look at this very candle. After a number of indecision candles that are these dojis, this close above previous doji's high is a very strong signal for a bullish momentum. And of course the body of this candle is much greater than the body of doji, because doji has no body. Okay, and this way we have rising momentum to the upside. At this candle we close it, and the total result with this trade is 16 pips. So we have 16 pips of reward, and our potential profit could be 92.8. And what happens next is this. We exceed our high like this, but we still, oh come on, we exceed the high, but we still stay within this invalidation limit. Okay, so what do we have here? We have our initial low, yes, then we have kind of indecision candle, and then we have an outside candle that extends our low. We don't have a lower low, because we should have, at the same time we should have a lower high, but we have a lower low and plus higher high. So basically what I would look at here at a lower low here, and all the sequence should look this way. So we had first, second, and a lower low below this one. This would be, because this candle, after this candle closed, so let me show you what I mean. We first had this way movement, yes, then we moved to the upside, then initially we moved to the downside and immediately to the upside, yes. So as I told you, we should wait for this candle to close. We should only count those candles that are closed. But when we were installing this low, the candle was not yet closed. It could be trading somewhere here, or it could be trading somewhere higher before it could move several times up and down, up and down, up and down. So wait for a candle to close, and it should have a lower low and lower close. We should maintain lower lows. We should not have them. We should not have higher highs. Okay, so hope you understood. That's why it simply extends the price action, the first low, then it has a lower high, and then we need the next lower low, which we didn't have. So based on this information, what I do, I simply wait for a lower low to install, and we didn't install any, but instead we extend higher to the upside. And let us check if we still stay within this invalidation limit. Yes, we stay within the invalidation limit, and we do not have any bear trend, and then we extend even more, and this exceeds the invalidation. So this time we simply do not enter. Okay, the next pattern that is here is this unified Gartley. So let us examine the price action within this Gartley. We just move higher and higher and higher, and this is nothing, no trading opportunity. This one has broken C to D leg. This one also has that broken C to D leg, because it should be only one swing to the downside. So the next pattern is this unified Gartley. We should zoom it in, we should go stretch the Fibonacci. Okay, obviously we have a sequence of lower highs and lower lows. Just look at this. We moved this way, then we retraced slightly to the upside, and then we retraced to the downside. Although we returned back, we still maintain the lower high, because the high of this candle is lower than the initial one, so the downside zigzagging movement is intact. That's why we simply stretch our Fibonacci and measure the 50%, place it here, and look what happened. The next candle opened with a gap to the upside. It gapped through our entry. Because we didn't have any price with gaps, that's why our broker executes at the first price that appears on the chart, that appears in the quote. So the first price of execution is this. Of course, we use our ATRs to entry as soon as our trade is executed, and then we go lower and lower. First we exceeded one ATR, then we need to do this cutting risk stuff, then it goes lower and lower. We then exceed our low, and at the same time we go exceed the 382, which tells us to plot an accelerated trend line. At the same time, this is the situation when we have primary trend line the same as accelerated trend line. Okay, so it looks this way. You just draw from extreme to whatever prominent high here to unite all these candles into one direction. And of course, you should base your decisions on the candles that are closed already. You should not base for example, if this candle is not yet closed but already exceeded that, then the price action that you have is this, based on closed candles. That's why you need to wait for this candle to close, and only then you should put your line here. Okay, so look what happened here. We tried and we failed. We retraced, and we then closed much higher. More, almost total range of the body is outside of this how do we call it, trend line. Okay, and of course when price was moving here and here, we moved our stop losses to break even. Okay, and we exit at this break of the trend line, having totally 23.1 pips generated. 23.1 generated, and let's examine 23.1 pips. Let us see what was the potential take profit if we go there. It could be 46. So you see how you have many of these situations when your take profit is not hit. Well, it depends on what trader you are. You can use 382, you can use 61A, or you can use a combination, first target 382 and second target 61A. But in whatever case you use, you will always have these situations when your take profit is not hit. There are very, very common. That's why exiting at the trendline break is one of the wisest decisions. Instead of giving your profits away back to the market, you just close your positions, and don't let your winner turn into zero. Even if you break even that trade, don't let it turn into zero. Okay, the next pattern is this Cipher, and let us see what happens here with this Cipher formation. Of course, let's zoom it in. Let's go and start it. This candle completes. Okay, the uptrend appears here. What do we have? We have initial bullish candle, very simple, yes, bullish candle, then next candle continue the high, then it moves lower, and then we have another bullish candle. You see, we have the zigzagging structure, and then we continue the high. The total movement is this, of course, if we use it straight lines. So we have it this way. I'll just mark that with horizontal line and delete the Fibonacci. Okay, so our entry triggered here at this line, and we place our ATRs here. So what we did, we moved lower first, and then we reversed here, yes, and we installed a new low, and then we started to move higher and higher and higher, and at this candle we did both. We exceeded our initial high and our first ATR. So when we exceed the first ATR, we do cut our loss, and we exceed our initial high, we draw the trend line. We wait for this candle to close, because we only need to use the price action of closed candles. That's why we draw it this way. Okay, so what happens here? It is the situation, very interesting situation here. We have movement to the upside, higher and higher and higher, yes, and then we reject to move higher. We see this support level, and price rejects. We just move lower, but this trend line also supports that. It doesn't it prevents price from moving higher. Okay, so we have an inside bar. This is an inside bar if compared to previous bar, and the next bar is also an inside bar if compared to previous bar. And if you guys know something about the chart patterns, when you have that inside bar followed by another inside bar, they are triangle formations. They are signals of continuation. But these triangles formations, yes, when they are preceded with this, they are signs of continuations. But when you do not have very sharp reversal, we did have one candle here, yes, when you do not have sharp reversals, these triangles are basically neutral. It depends on what side of the market it breaks. We broke into the upside, but what happened to this trend line? The triangle is typically an indecision, so we already understand that the market does not want to go higher, and at the same time it doesn't want to go lower. And when we have the candle, the majority of its range, the body of it's totally below the trend line, we can consider this a break. We have a close below the trend line, we open and high below the trend line, sorry, low below the trend line. almost total range of the candle is below this trend, so we should consider it as a breakout. That's why we simply close position with what we have, and we have 90 pips, 9.0. It is not 90, it is 9.0. It types 90 because we have 5 digits, but 1 pip is the 4th decimal, it is not the 5th decimal. Okay, after that price action goes lower, and let's calculate the initial thing. When I say initial thing, I mean the target, of course. So we should measure it from here to here, and it was 44 and 4. Let me type it here. Okay, then we exceeded our extreme. We went here, and we had some initial thrust to the upside as well. Okay, so what we need to do, again, we need to measure it. Do we have an uptrend? Let's calculate it according to our price action. We move here, open here, then we'll move to the low, we move to the high, and then we close. So the total is here. Then we open here, we move higher, and then we move lower. So the total is here. Then we move inside bars. We should skip those inside bars, and then we move here. So our zigzagging appears at this high. Our zigzagging stuff appears at this high. So starting from here, we understand that we have an uptrend. Okay, next, what we should do next? Next candle, we wait for 50% to be hit. We are looking at 50% pullback. Do we have? We don't have any. Then on the next candle, we don't have any 50% pullbacks. Next candle don't give us any 50% pullback, and next candle we stretch, and after that the 50% pullback starts, and we hit that. Basically, I don't remember if I told you, we are to restretch it over and over again until we hit the 61A. 61A is our target, and before that we can restretch the fibs, waiting for a pullback to enter. Okay, in this case it looks this way, hitting 50, and then 50% is our entry. Just after we entered, we use our ATR to place the stop loss. It is 3 ATR away from the entry, and look what happens. We first go here, we cut our loss by 1 ATR, cut our loss by 2 ATR, and then we exceed the initial high. So we just do it this, delete, we then delete this, okay, and then we exceed. So when we exceed that initial movement, so what we should do is to plot an accelerated trend line. In this case, we first need to plot the primary trend line, which is basically this one. Yes, and the accelerated trend line is something that is drawn from the primary trend line, and that unites these candles to this way. Okay, so it is the accelerated trend line. And what happened here? By this spike we triggered the 618 target. Obviously from here to here we went to 618 target, and just before that, of course, we did the break even the trade because we hit the third ATR. But obviously we had this take profit. It is 37.7. The take profit was 37.7. Our thing equals to take profit because we have one, and we just copy it here. So you see, we just move higher and higher. 7 trades so far, 0.17. The average win is very small for now, guys, don't be in a hurry. Average loss is slightly greater than average win, but they tend to become equal because constantly cutting the stop loss, 1 ATR cut in it again and again. In the end it should become somewhere 0.9, 0.8 on something of this kind. I mean the average risk through, but right now it is 0.41, not the best one. Okay, so this was a Cipher advanced formation. So let me delete all this stuff and let me start a fresh view. This was initial movement. Okay, another Cipher is this. So just zoom it in, stretching the fibs, and let's start from the completion of the pattern. So the pattern completed on this candle, and I also want to place this invalidation horizontal line. Okay, now I know that we have invalidation here. So what do we have? Do we have an uptrend? No, we don't. Do we have an uptrend here? Yes, obviously we have an uptrend here. Just notice this price action will move to the upside, then we'll retrace, then we'll move to the upside. So this is a zigzag, the one that we are looking at. So when we have one, we just draw our horizontal line entry, and the next candle gets us on board. After that, after we execute it, we place our stop loss. It is wise to execute trade, to place the stop loss just at the moment of execution, and the pattern trader system does that automatically. Okay, so what we have, we executed the trade here, then we move lower, and then we move higher. When we move higher, we accomplish two tasks. The first task is to exceed 1 ATR range, and this way we cut our loss. And the second task is to exceed our initial low, which triggers the trend line drawing. But guys, when we only have two candles, the trend line should not be drawn. That's why you should wait for the third candle to close to see if price action changes. Of course, this should be restretched here, then it should be restretched here. It is called the target adjusted. Okay, the third candle shows that our initial two candle trend line was not okay. Two candle is not enough. That's why we wait for price action to exceed this high once again. So it did on this candle, and from here 1, 2, 3 candles, if we draw our initial trend line, we can see that all 3, 1, 2 and 3 stay above the trend line. The main concept is that all 3 should stay above the trend line. Otherwise, if only 2 stay above and the third one is penetrating to the downside, the trend line is not okay. At least 3 candles should stay above, and for bearish they should stay below. Well, and what do we have here? We have our trend line being respected. It goes higher and higher and higher, 50% hitting. When it hits that 50%, it also hits our second objective, the 2 ATR. Our stop loss is cut to 1 ATR, and after that we spike to the upside, and then we reject something. It looks like we reject from a powerful level. So if we look back to here, we will notice that this was previously support, 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 then we broke and it turned into resistance, 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 and now we're sitting at the same resistance. So obviously the majority of the candle range, so if you measure the total range of the candle as 15 pips and 9 pips, yes, 9 pips is below that. It is obviously that the most of the range is below the trend line, and also the total body. The total body below the trend line is all by itself. It is a very good significance of that breakout. Okay, so continue. We just measure that, So we have 99 pip stop loss or take profit, sorry, not take profit, profit 99, and 32.9 was potential take profit. Okay, 32.9 potential, 19.9 was our real take profit, real profit. And we'll move further. Okay, after that, after we move here and hit our targets, we just go to the next opportunity. By the way, here we exploit the concept that I call if the profit could be made. You know that I stretch the Fibonacci's to find a 50% pullback to enter all the way up until the 618 is hit, yes? And in this example, we didn't have a 618 hit, yes? So basically, some of you may say, you know, Alex, you should stretch your Fibonacci's to measure this leg and re-enter at 50% one more time for a second pullback. No, because we already made profits, and somebody else who was trading this Cipher Advanced Formation already made profit. So if the profit could be made, sometimes we have initial reaction that only the profit could be only made if you enter with limit orders, and in this case you can restretch your Fibonacci to look for a pullback. You see that? If you couldn't make any profit, then you stretch it. If you made a profit, then you should not restretch that for the second time. Hope it makes sense. Well, this cipher invalidated broken C2D, although we had some reactions within the zone from here to here. We had some reactions to the downside, could profit from them, but I dislike that C2D leg. My profit should be very obvious. It should be 1, 2, 3, 4 leg, and that's it. Okay, another pattern is here, which fits my requirement. And we start from these candles. This one completes the pattern, the first that exceeds this high. Okay, after that we have one candle and then to the upside. It is not obviously a downtrend, and this one, a combination of these candles. I already have my eye trained, so I can show it to you. So it is a combination that is called a minor downtrend. You see, that's why we should stretch our Fibonacci from here to here, and we should place it at a 50% level. Let me delete fibs. Okay, now it is not that messy. After this candle, potentially we could enter, oh guys, let me do it more precise, so slightly higher. Yes, because we had this dodgy, and after that we didn't hit that. No, the initial was okay. Okay, delete this. We have a pullback that extends all the way to the upside, yes, but it means nothing. We know that price may extend beyond our pullback. So we simply wait until price reverses into our direction. By the way, when price is moving this kind of sideways, you should monitor the these things, upside border and downside border. When you kind of channeling this sideways movement, you should monitor. If price breaks to the upside, it is advisable that you close your position without waiting for your full stop loss to be hit, because in majority of situations when you have that sideways movement, it signals the continuation. If you have problems in identifying the sideways movement, you just switch to horizontal line tool, and you see it is simply moving sideways. So we had initial, then we move sideways. Lucky for us that will break to the downside, but typically it breaks to the upside. So when you switch to that line and you see that price is moving sideways like this, and your price does not start the movement in your anticipated direction, don't wait for your stop loss to be hit. Exit at whatever signal of closing the position. So this is a tip for you. You should keep this in mind. Okay, we didn't break it to the upside, yes, we just broke it to the downside. So what we basically have, we broke our initial low, you see, with this candle, and at the same time we also went to hit that one ATR level. That's why I cut my loss. When we have it this way, we broke our initial low. So I am to plot my trend line, which is a primary trend line in case price reverses immediately and closes above that. It could be a good situation. So I have 1, 2, 3, 4, 5 candles below the trend line. It meets my requirement. I just put the trend line to connect two most prominent points between these things, between these candles. Okay, after that we move lower, spiking slightly to the upside, we move lower, and then we finally move lower, and at this candle we hit our second ATR. That's why we cut our loss by another ATR. By the way, we should stretch it this way, by another ATR. This is called target adjustment. We should restretch our Fibonacci every time we have a higher high. And of course our 618 target goes slightly and slightly because of that thing. And you see this candle also, we hit our second ATR level and we hit our 382. So after this candle closed, it hits that and it should close. We use the information between these candles, from the one that touches here and the one that is here, to find our 2 points. And we should stretch our trend line, and it should not go through the bodies. It should not go through bodies of candles. So basically it should be something of this kind. So the bodies should not cross the bodies. Okay, so what we have based on this trend line, after this candle close, we understand that we have lost the momentum of the downside movement, because we have candles to the upside, then we try to the downside but then immediately rejected, then another, this is having a long wick to the downside, then we had this lower highs, you see, they symbolize the downtrend intact, but then it was false signal of lower highs. Then we have that close above the trend line, and we have a higher high, higher low. Basically 1, 2, 3 candles, they simply violate it to the upside. Previously we have an uptrend already. Okay, hope you understand the thought process. When you see a bull candle, you expect next candle to be bull candle. You expect next candle to progress more and more and more and more and more. So when you have a red candle, you expect next candle to be red as well. But guys, when you have a red candle and you expect next candle to be red, but instead you have a green one, your expectation turns false and you close your position and you start panicking, you start doing something, I don't know, to protect your profit, cut your losses, whatever. Maybe reversing the position. There are so many techniques, so many traders, but basically when you have an upside movement, the next one will tend to continue that, next one will continue that, and next one will continue. And the odds are in the favor that the trend will continue. So we close this position at how many? 17.0. but potentially we could make 48 and 8. 17.0. Okay, now let's go next. So what is that next situation? We made the profit, we hit the 382. That's why we do not re-enter. No need to re-enter, we already made the profit. This is what I call if the profit could be made. If we couldn't make a profit and this was very sharp movement, then we would enter at this retracement, but right now we made our profits. Okay, let us zoom it in more and let's trade this cipher. So we stretch our fibs, a cipher is completed here. So what we basically have is this uptrend, obviously. Yes, we have it this way, then we have it this way, we have it this way. So we have that uptrend. We need to stretch our Fibonacci and we place our 50% pullback here, you see. Then we just delete that, we don't need it. And look what happened, we didn't trigger that pullback, next candle didn't trigger, and the first candle that triggers is this one. So we should place our entry lower. It is the first price where our broker could execute. A bit better than we initially wanted, but it is still a stop loss. We moved to the downside without any upside movement. By the way, after we triggered here at the open of this candle, we moved slightly higher, spiked to the upside, and you see we didn't hit 180, so we had no opportunity to cut a loss. That's why we have it full, 35.0. Okay, let me also calculate the potential target that could be made. It could be made, how many? 38.1. Then what we have next, the result was a stop loss, so it equals minus stop loss. Okay, we have a retracement. Not always we win, of course we should lose sometimes, not always. There is no strategy that only wins. Okay, another trading opportunity is this unified Gartley, and let's examine the price action. Let us see how we can profit from the movement. Okay, the rules is this one, then we go the retracement, and then we go this. So we have a downtrend from this 1 to 3 candles. Then we go here and we enable our 50% rule, pullback or whatever. Just delete this, and the next candle triggers our entry. We enable our ATR, 3 ATR below, 3 ATR above, and here's the line. After we triggered that, we then have the next candle violating our low. You see that? It violates it. It goes below our initial low. Next candle is the indecision candle. Of course, we cannot draw the trend line based on 2 candles. Yes, as I told you, we should have at least 3 candles below. That's why we wait for the 3rd candle, and once we get the 3rd candle, we have 3 candles below the trend line, and that's enough for us to draw the trend line this way. Okay, so what we have here after this candle closed above our trend line, we have the breakout. Yes, so what we need to do, we need to exit on this trend line close, and we have minus 1.5 pips. But we could potentially make 44.1 minus 1.5, and the result is this. Okay, after that, what do we have? We then exceed our high, yes, like this, and we then install a new downtrend, yes. But we also should keep in mind that when we install a new downtrend, we also keep in mind about this sideways movement. So just look at that sideways movement, yes. So we should be very, very cautious. We should be very aggressive in closing our position. Okay, so what do we have? We basically have our downtrend, yes. We moved here, we moved here, we moved here. So no doubts that we have a downtrend here. Then we just stretch our fibs. Okay, I will use our old trend line. We enter slightly higher. Then we just delete this, and we get on board when this candle crosses our thing, and then we go higher. So after we installed a lower high, you can see that we installed a lower high, we then moved lower, and although we didn't exceed our highs, we went move low enough to test the bodies of the candle. We're testing the lowest close. So based on, you can also watch it this way. So based on here, we have two lower lows based on close. This is what I was talking about, that it is a retest of previous lows. It is not a violation, but a retest. The retest also serves a good signal to plot a trend line, to plot that primary trend line. A retest is enough to initiate that plotting. Okay, so what do we have after that? We just break it with this candle to the upside. So what we need to do, just need to measure. Let me measure it from here. It is minus 8.1, minus 8.1, minus 8.1. Have a number of losses. They are not very big, and potential win could be 47.1, 47.1. Okay, after that, what happens after that? We then exceed our initial thing, initial high, yes. So we're still stay below the invalidation level, yes. And we then have a downtrend as well. So look at this. We move lower, then we move higher, and then we install a new low. And this is what the downtrend is all about. Simply lower lows followed by lower highs. Then we make attempt number 3 to sell it. We already, maybe we should not make a third attempt to sell it because the sideways movements typically continue to the upside. But let us stay mechanical. Simply execute what you see without any interpretation. Yes. So what we have this uptrend, yes, we have this initial low, and then we trigger our entry. We put our ATRs. It's not good seen here, but what is the low of this candle? 64.25, 24.7. So we do not hit that. But what we do here, yes, we go higher, trigger our entry, install a lower high, and then we exceed our initial low. Once we exceeded our initial low, we should draw the trend line. So what is the low that exceeds that? It is this one, yes. So we should draw it this way, including our most recent low Okay, so after this primary trend line is plotted, look what happened here. We have a tail close. It is the powerful bullish formation when the close of the candle coincides with its high. Then we have the shaven low, and then we have a break of the trend line. So basically it is a very good indication of continuation. And again we have minus 1.4, minus 1.4. Okay, and potential target could be as big as 52.7. 52.7. So you see how you keep your losses short. You do not allow your loss turn into a large loss. Of course, we understand that our loss is 35 pips, yes, but it is much better to close the position and re-enter it again and re-enter it again. It is much better to close the position and re-enter it again. I've been re-entering it 3 times and my total loss is 14 pips, which is twice less than my initial loss. So instead of waiting and hoping for price to reverse, you'd better close your position with small loss, and when you have a second chance, you just get on board. And if it is a take profit, you will have a very, very nice risk reward because your stop loss, your losses are very small. And if it's not a take profit, then it is a small loss. Okay, you see, 3 times I've been re-entering, 3 times I lost, and the total of them is 14, which is much less than just waiting for a stop loss. Of course, we could set a stop loss to the invalidation level and wait until it is hit, and you see we just gapped through that stop loss. That is not good. There are principles of trading. Just cut your losses short, try to make them short. The stop loss is the level that should never be hit. It is the level when you understand, when the market tells you that you were wrong. The market should never go there, that you are dead wrong, that you are absolutely wrong. It is your safety place. It is the place when that shows the worst case scenario that may happen. Okay, hope it makes sense. And we continue. Our next unified gullet formation looks this way. Stretch the Fibonacci. The first candle is this, second is this, then we go higher, and then we install our downtrend. And guys, I want you to look at this formation. We'll move lower this way, then we moved higher, then we moved lower, then we moved higher, then we moved lower. So we have our minimum downtrend. Let me zoom it in, by the way. Why not? So we moved from here to here, and then we install our entry as a 50% pullback. So after that initial low, we have next candle that triggers our entry. Okay, we'll place it here. Now we have this following price action. We'll move lower and we hit our first ATR. It tells us to cut our loss by at least 1 ATR. As we exceeded this low after the close of this candle, I should connect 2 most prominent highs to draw my trend line. Yes. And what we have these highs, lows, sorry, that are rejecting from 33.54.9, like, I don't know, it is shaven shaven lows or whatever you call them, tweezer bottoms. By itself, it is a signal to buy when you have them 1, 2, 3, 4 shaven lows. Okay, wait for a candle close to close above the trend line. The majority of its range is above the trend line, the open of it and the close of it of the trend line. So many indications of true breakout, and that's why we close it with plus 1.8. It was a win, 1.8, almost breaking. But we could make potentially here, we could make how much? 42.3, 42. Okay, now you can see that because sometimes the losses are very small, the average risk reward turns into a greater risk reward. The win probability of course turned lower because at one pattern we can have 3 losses. It's not the win probability for patterns. The patterns are somewhat around 60% correct, but how you trade them, you can trade the same pattern 3 times, 4 times, 5 times, and you may have a loss, a loss, a loss, and a loss, and a loss. So instead of 1 loss, you have 5 losses or 3 losses or whatever. Or you can have several winners. It all depends. Okay, now what do we have? Although we had a winner, we didn't hit our profit objective. So if we ask a question, could the profit be made? It could be made, but it wasn't. We didn't have 382, we didn't have 50% retracement. Okay, then we move here because we exceed our initial top. It symbols another continuation. So what do we have? We have this inside bar. Inside bar should be always skipped. Then we have this downside. Then we move it here. Yes, if you like it, you can understand the movement better. So we have it this way. It is a downtrend, obviously, on minor time frame, on lower time frame, maybe 1 minute, 5 minutes, doesn't matter. You should be able to understand the downtrend based on these candles, minor downtrends. Okay, so what do we have after we install this low? Next candle triggers us into the position, and we have it this way. Yes, we go higher, we need to research our fibs, but it doesn't matter because our entry stays the same, we cannot change it. Then we go lower, and we simply test this low. We test this low, we test the distance between high and the what is that? The close and the low. You see, price enters the zone between the close and the low. So this is what is called a test. Okay, so after having a test, what we need to do, we just draw our trend line. So the two most prominent highs after this candle closes, and what we need to do, we need to exit at this candle breakout. So we have minus 7.6, it is the result, 7.6, and we could potentially make 44.8. Okay. Now let's continue. So what price does, it installs a new high. Let me go at the old line, and we're still below the invalidation level. And what we need to do is to participate in this trading opportunity. Where is our downtrend? It looks this way, yes, obviously we have it. Then after that downtrend installed, we just go enter at 50%, slightly higher, this is the third time we attack this pattern. For the third time. Let me delete this trend line and delete this as well. Okay, this is our initial low, then we were triggered here, and our Fibonacci, our ATR is here. So we just move higher and higher and higher. We need to restretch our thing. What is that? We need to restretch our fibs, and the pattern becomes invalid at this level, but it doesn't mean that you need to close your position. You're already in this trade, and your trade was initiated before the pattern was invalidated. So you should stay in this position. You should still stay in this position. So what do we have here? We didn't hit our stop loss yet. Our stop loss is the 3 ATR. We didn't move it lower, the stop loss, because we didn't have a downtrend yet. The downtrend was here, 1, 2, 3, yes? And after that, after we trigger that, we should move to the downside at least 1 ATR, but we didn't move there, and that's why we don't move the stop. Okay, what price does? It moves even higher. You see this? It moves even higher, and after that we have the following price action. We test our initial entry, but it makes no sense, and it is nothing for us. And then we break our initial low, the low that we used to measure our minor downtrend. So we break it here, and we also do what? We also break the 1 ATR level, install that 1 ATR level. So we cut our loss, and after this candle closed, which one breaks that? Okay, let it be this one, at least it tests our initial low. So we just use the candles to draw most prominent highs, and they are this. You see, like this. So between 2 points we have 1, 2, 3, 4, 5 candles. Okay, and yes, all of them below this trend line. That's why the trend line is intact. Let me draw it, make it of this color. So this is a trend line, and this is the line of a pattern. Okay, after that we move lower and lower and lower, and then we gap through 382. When the 382 is hit, guess what we do? We just draw a accelerated trend line, and we should use the most prominent highs. So they are here. They should not spike it to the outside. Okay, well, it should be this one. So right now it is the ideal accelerated trend line, and price accelerate way much faster to the downside. And what it does, it actually hits the 382. It hits the 382. No signal to exit the position, because it shouldn't be only exited when price hits that to the upside. So you can see our third position is profitable. So we had 2 positions, small losses with this very pattern, and our third position turned into a win, which was a take profit of 43.1. So we have a 43.1 take profit here. Our result is that take profit, and the total result is our result minus spread, of course. So you see the chart moves to the upside, and the average risk reward turns into positive. But it's not that ideal. For now we only have 16 trades. The result of 100 will be more or less enough, but right now it is not. Okay, you see, first attempt, second attempt, and then we at the third attempt we entered good. Tried small loss, and then win. And just before that you can see this was our 2 first attempts, and was total minus 7 pips. And of course our next third trade, it's worth taking them all, because the net profit was pretty good. Okay, the next pattern is this unified Gartley. What we see, we don't have any downtrends, no zigzagging movements, just move to the upside. And then the next pattern is this unified Gartley, and let us examine the price action and let us see if we could enter that. Okay, it triggered not here, it went lower. And what we have this uptrend, sorry, not the downtrend, uptrend. We have this candle to the upside, yes, then we have this to the downside, spike of the candle is lower, and then we have it here. Well, it hits 50%, it doesn't hit 61A, because we didn't have any pullbacks during this movement to the upside. This is the so-called, if the profit could be made during this movement. It couldn't, because we didn't have any pullbacks. If it couldn't be made, then all the guys are waiting for a pullback exactly the same way as I do, and I wait for a pullback here. I trigger my 50%, stretch it here, and then it is tested by this candle. This bearish candle tests my entry, and you see my entry coincides as support with this support, spike, support, and so on. Okay, let us draw. After we install it here, we then go here, and we then move it here. And this candle does two of things. First, it invalidates, it takes away our initial high, and then it passes through this 1 ATR distance. That's why we just cut our loss, and we plot our accelerated trend line. That should be this way, should be plotted this way. And at the same time, we cross the 382 level, we enter the IPO. That's why we need to plot this was a primary trend line. We should plot an accelerated trend line, and the accelerated trend line is something that looks this way. Okay, so what's remarkable about this trend line is this, that we have this open and close at the same time, and high, open, close, and high. Then we open lower than trend line but close above the trend line. Then we open and close at the trend line. The majority of the candles range is above the trend line, and we should exit only at this candle when the majority of the range is below the trend line. The close is below, the open is below, so we should exit at this candle. This could be signaled as a breakout. So we just made 15.8, and the potential take profit was here. The 61A was 19.0. We took most of that profit. Okay, and then guys, we have another pullback, and here you ask the same question once again: could the profit be made on previous movement? Yes, it could be made, and it was made. That's why you miss the rest of that movement to the upside, because you already made the movement, made the profits. Okay, now let's continue, and here's another unified Gartley, and we will trade it. I suppose we'll trade it for several times as well, because of that sideways price action. Okay, zoom it in. So what do we have starting from this high? Again, we have initial low like this, then we have a lower high, yes, and where is our lower low? Where is that? we don't have it. That's why we skip this and we go higher, and we examine the next situation, which is this. We have our initial low, maybe even this kind, then we have the green candle moving higher, and then we have it this way. So this is obviously a zigzagging formation with lower lows and lower highs. It means that we need to stretch our Fibonacci, we need to place our entry at 50%, we need to enable our ATRs. So what price does? It moves higher, 1 ATR, yes, and then it moves lower. First of all, we take away our initial low, that's why we need to place our trend line. It is the primary trend line. And second, we also hit 1 ATR distance. We need to cut our loss, cut our risk. And what we have here, lucky for us to exit with this small movement, it was minus 3.1, and the profit that could be made is this. 34.4. Okay, so here's the trade. I want you to pay attention to this price action. We first had initial low, then we had highs, and then we didn't have a low. That's why we skipped this reversal. Okay, let me zoom it in, out, zoom it out. This one has broken CTD leg, this one is nothing. Okay, this is a potential trading opportunity, and what we have bearish candle, one green candle, it's not an uptrend, and then we move lower and we hit our invalidation line. So this is what I was talking about, moving sideways and then continuation to the downside, even lower. It happens more often than you can imagine. Okay, broken CTD leg. This one is invalidation, just straight through the reversal zone and no signal to have it. What we have here? Well, nothing, and this cipher is the first one to be traded. So we start from C to D. Okay, and okay, so it starts here. Let me zoom it in. Now zoom it out slightly. So what do we have? We have it this way. We have initial low to initial high, then we have this, and then we have this. Yes? It is 1, 2, 3 movement, zigzag of this. We just drag our Fibonacci from here to here, place them to this, and look what happened. The open of this candle is lower than our entry. You see this? The open of this candle is lower than our entry. So of course we base our decisions after this candle closes, and we make a decision to enter at 50%, and we tried, but it opened lower. That's why we pulled the trigger when we have a better price. Here are our Fibonacci, here's our thing. This is our initial high. So this next candle does two things. It first triggers the 1 ATR, so we just delete this, and then it hits our initial high. That's why we draw our trend line. And at this stage, what we do, basically we did this. All these three candles, 1, 2, and 3, they are staying above the primary trend line. Then we move higher and higher, and what it does, it hits our second ATR, so we just delete this. Then we move higher and higher, and it hits our third ATR, so starting from this, the position turns into a break-even position, and then we finally break our trend line at this close, powerful bearish close, and we generated 21.5 pips, 21.5. But we could potentially make 92.1. Okay, it was a nice try, but it didn't happen. Well, did we hit 3.2? Did we hit the IPO at this stage? No, we didn't. That's why after closing our profits, we can re-enter. Although we made some profits, but we didn't hit the 3.2, the IPO, this stuff. And what we have here, we have initial thrust, and this movement is very nice. It is an uptrend, of course, on minor time frames. So it looks this way, here to here, here. Very obvious uptrend, yes. And as long as it didn't touch the 618, we can stretch our Fibonacci to find a 50% pullback. We don't have it here, we don't have it here, we don't have it here, and we place it here to enter that 50% pullback, and then we go higher, higher and higher, and you see we didn't trigger, we didn't have that 50% pullback. That's why we stay away. After that we hit the 618, and it already makes no sense to stretch the Fibonacci further. The pattern hit the targets, not our targets, but other guys' targets. Okay, so this is broken C to D, this is broken C to D, this one is straight through to the downside, I suppose. We have this one candle to the downside, yes, no entry here. Then, sorry, need to turn it on. No, nothing here. Another pattern, and you see how often it does this. It gives an initial movement, then it gives the second movement with a lower low, and then it gives a movement that is true. So the first movement is kind of a false movement, then it gives us a pullback, and after that we have a true movement. So sometimes it makes sense to wait for price action to show the direction. Okay, this was a movement. So look at this. We move to the upside, move to the downside, and we'll move to the upside here, and this candle has a high. Okay, we stretch our Fibonacci. We then place our horizontal line, it is our entry. We then place our ATRs, and what price does, it moves slightly sideways, then it moves lower and lower and lower, and then it moves higher. By the way, okay, we moved slightly sideways, but then we moved higher, and we tested our initial high. So we tested our initial high. After this candle closes, we should plot a primary trend line. So it should either exceed the high, or it should test the high. The testing of the high means that it enters the zone between the close and the high. Okay, so we had it here this way. Of course we should wait for this candle to close, and it was obvious violation of the trend line, and see how the trend line acts as resistance after it was broken. It was minus 23.9, and we could potentially make minus 23.9. We could potentially make 73.8. Minus 23.9. Okay, small loss, not that very big loss, but still it is not a pleasant situation when you have losses. Okay, then we move lower and we have another potential entry. We have this uptrend again, yes, so we have initial high, outside return, and then we have a higher high. It is obvious when you have these candles with high highs and high lows, it is pretty obvious that you have a uptrend. We go to 50%, we delete this Fibonacci, and look what happens here. We enable our 3 ATR. Immediately after price moves to the downside, we even can restretch the Fibonacci, and we do not hit our 3 ATR stop loss. The buffer was enough. But then we go higher, and at this candle we test our high, and we also have this 1 ATR movement to the upside. After this candle closes, of course, we should stretch our trend line. We should enable this trend line. Okay, yes, and here's the situation, guys, that I'm talking about. When we have this kind of close below the trend line, this should have a continuation, this close below the trend line. We should have next candle being red as well, because the majority of the candle range stays above the trend line. The midpoint of the total range stays above the high, and the open is above that. That's why we should consider this as a false breakout, and you see that next candle confirms that that was a false breakout. After that we move higher, slightly higher, and then at this candle we have the close, we have the body, we have the low below the trend line. That's why we exit at this candle, and this was 9.9 winner, and we could potentially make how much? 76.1. Okay, and then it moves without us. We were just away from this. We just exited that. Okay, it's okay. After that, this cipher is invalidated, this one is invalidated. Okay, this one, potential trading opportunity, looks good, but let's apply the rules. It looks good, but we should apply our rules. Okay, obvious downtrend at this point, yes, then we just measure it, enter at 50% pullback, delete this stuff. Okay, so we had this pullback to the downside, then we take away our low, and we also hit 1 ATR. That's why we cut it by 1 ATR, and we plot our trend line. Okay, and the trend line should be plotted this way. Okay, next, what is next? Then we just wait, and we see that price hits our second ATR, and we should cut our risk by 1 more ATR, and then it hits that 3-2, this touch and reverse, you can see that. So we should plot our accelerated trend line after the 3-2 is hit. So what we should do is to use the most prominent points from here to here. Okay, what are the most prominent? No, those that do not exceed the trend line. Okay, so this is the accelerated trend line, and then price goes sideways, and look at this candle. We have an inside bar, then we have an outside bar, bearish, kind of indecision of which way to go. Then we have an inside bar. This is also an indecision. I don't have any buys. If only an open of this candle would stay above this trend line, then I could close it at this candle, but I wait for a confirmation, and the next candle is the follow through. It confirms the initial upside movement. That's why I will exit at this candle when the breakout is confirmed. Right now it looks right in the middle of the candle. The trend line is in the middle. It could be both. We have 9.8 pips generated, 9.8, and we could potentially make how much? 618 is here, 47.4, 47.4. Okay, so now we should answer the question, could the profit be made? Yes, it could be made, because after this pullback we had the movement towards the 382, so the profit was made with this trade. That's why we do not re-enter, and we actually couldn't re-enter because it hits the 618 at this sharp downside decline. Okay, that's it about this pattern. Now we go to the next one. It was broken CTD leg. One of my requirements didn't met. This one went to the downside, the bull one, and exceeded the invalidation range, and the bearish was invalidated because of that broken CTD leg. Okay, the bull one. So it starts from here, and okay, this is a very interesting situation at this pattern. We completed the pattern, then we'll move this way, downside and upside, and at this situation we have equal lows. We should not have equal lows, we should have a higher low. When we have equal lows, then we most likely have a correction or consolidation. We should have a higher low. It should not be equal. So you can see they are equal, and after that we have a higher low. No, it cannot be qualified as a good minor uptrend. After this we have that. Okay, it is nothing, no trading opportunity here. Then let's go to the next pattern. Didn't complete, and the CD lag was broken before the completion. This one, small 53. Okay, so we start from here, inside bar, then bear trend bar, nothing. then we go here, and then we go here. Okay, look at this. It's a wonderful situation, wonderful trading opportunity. Look at this. Going higher, retrace, going even higher. You see this wonderful uptrend at these two green candles. So what we do, we stretch our Fibonacci's, we place our 50% entry, then we delete that Fibonacci, and we execute it here. Of course, we should also enable our ATRs to trail our stop. So what price does? It moves lower. Initially it moves lower, then it moves higher, exceeds our entry, and we have our extreme and our candle being one candle, so we cannot plot our trend line, so we would wait for two more candles. But what we can do is to cut our loss, and we just cut it. Next candle hits the IPO, and we should plot our accelerated trend line, and of course we cannot plot the accelerated trend line based on two candles because we only have two candles. That's why we would wait for the third candle. But what we can do, we can cut our loss a bit more because of this candle. Okay, and then when the third candle appears, we hit 50% retracement. Starting from now, we can plot our accelerated trend line to find our exits. And what price did, it went the third ATR to the upside, and we break even our trade, and finally we hit the 618. So this is obvious take profit trade that generated 35.4. It equals take profit, and we generated some pips. Well, not bad, 63% win probability. And you should take into consideration that with some trades we have many losses. We lose. Okay, that's good. And maximal drawdown is 57. I suppose it was this. Pretty good, 23. We are becoming more and more precise because we're getting more and more data. And the expectancy is 5 pips on each trade, or 0.33. It is also okay. Now let's zoom it out even more. Okay, enable this drawing and continue. This one is the next trading setup. So we stretch our Fibonacci from here to here, and it was not completed. Then we go lower, and here it was completed. Now let's examine the price action. So what we have here is this high, then it goes lower, then we have its high, and then we have a higher high. Okay, it was an uptrend. As we get our uptrend, we stretch our Fibonacci. It was an equal high, it was not a high high. Okay, then we just wait for another opportunity. We go lower, and we invalidate the pattern because we cross our invalidation level. Well, it was nothing. It was no pattern. Here's the next pattern. So we start from here, and we completed the pattern. Yes. Then we zoom it in, zoom it more. So what do we have here? We have this price action. Initially we move it from here to here, Then we kind of move it this way, this way, this way, and then to the upside, and then we install our low. So basically we have this as an downtrend. Yes. After that, what we do, we stretch our Fibonacci from here to here, and we wait for a 50% pullback. Do we have it at this candle? No. Then we stretch it here. Next candle does not give us a 50% pullback. And this is not, and the 50 appears only at this green candle. Okay, so we have it this way. We have a 50% pullback, and we need to place our ATRs. ATR are in place. Price, what price should do? It should install a higher high and at least test this low. Instead it moves higher and hits our stop loss. So minus 35.1. It is pure stop loss. No. And this one, what was our potential profit? 62.7. It could be a very good profit. After our stop loss was hit, we then move slightly higher, and look what happens. Oh, another situation, another opportunity. No, we shouldn't enter it this way. When we hit our full stop loss, we should not re-enter the trade. It is foolish. Our full stop loss for one pattern only. If we had small loss, then we can re-enter. If we had another small loss, then we can re-enter, unless the number of these small losses don't exceed the amount of the small losses do not exceed the amount of the large stop loss. We should not re-enter that. Okay, so the next opportunity is this unified Gartley, and it starts from here and it hits 61A. So we could participate or not. Initially we moved from this top to this bottom, and here and here. I think we could not participate. The profit could not be made. And then we go here. We didn't have a retracement to 50, and then we exceed our 618. The profit could not be made, but at the same time we exceeded the 618. If only it was slightly shy, that we could re-enter here. But although the profit could not be made, we stay away because it hit 618. Okay, another pattern is this. Look at this price action. This is not an uptrend. Then we go lower and lower, and this too is an uptrend. Very obvious. So we stretch Fibonacci, place this entry. These big candles triggers our entry, and it hit our stop loss, another full stop loss of 35.1, and the potential take profit could be 42.4. Okay, so we started our drawdown, and this time it is the maximal drawdown. For the history of this trading. Okay, we already backtested 2 years. Oh, can't be that slow. Let's go next. The next pattern is this Cipher. Should examine it. Nothing, it is invalidated. The next pattern is this Unified Godly. Should examine this. And the price action within this Unified Godly is the following. We have a downtrend here, of course, and the first retracement starts here. Oh, look at this. And we hit our 50% retracement with this spike to the upside. So you can see that spike triggered our entry. Okay, that's okay. So we triggered our entry, and we are in this trade, yes, and our ATR looks this way, and next candle exceeds our initial low. So what we need to do, we need to wait for the close. We should draw our primary trend line. So on the next candle we close above our trend line, we break it. So we have -2 pips, -2 on this trade, and the potential profit that could be made was this 618, and it was 40.7. Okay, could the profit of at least trade 2 be made? No, we didn't make any profit of trade 2 at least. That's why we can re-enter that. So we enter here, obvious downtrend, 2 candles at least. Okay, we replace our 50% retracement, and it is a textbook reversal. So you look at this, price hits the 50% and then retraces immediately after that, like this. Of course we understand that no ATR stop loss was hit, we're just trailing, and we just hit our 618. Of course we plot our accelerated trend line at this point when we have that trade 2 is hit, and the 618 was hit, yes. So this was the 47.7. Okay, I will pause the video and have a break. Leave this chat to start, not to forget where to start from. Okay, I'm back. Let's delete this stuff, we don't need it anymore. So this was the last pattern. Then we go to the next opportunity. This is the Unified Godly, and let's zoom the opportunity in to see what happened here, and let us stretch the Fibonacci. So we had our uptrend movement this way, it hit the 382 well, but we didn't have any opportunity to enter. We couldn't enter, that's why we couldn't make any profits here. That's why we can re-enter that on this pullback this way, placing the entry at 50%. Then we need to place our ATRs, and we have them this way, so we didn't trigger our stop loss. So what happens here? We immediately move to the downside. Yes, we test our initial low, and then we start movement to the upside. When we exceed this, we cut the loss, potential stop loss. We cut the potential risk. Then we continue. When we exceed this high, we also exceed the second ATR, and exceeding this high, we're also hitting the trade to IPO. This means that we should stretch our trend line. Okay, the trend line, all the candles are above this trend line, and that's okay. After that, we have it spiking, we have next candle spiking, and this is not okay for a breakout, for a breakdown. Wait for the next candle, and you see the next candle total body of it is below the trend line. The majority of its range is also below the trend line, so we should exit at this candle. Okay, what happens here is this 24.5, and potentially we could make 47.8. And this was a winner. Oh no, it should be this. Then what else should be done? We hit the target, yes, then we just go to the next opportunity. It is this cipher, yes, and what we have it gapping through the reversal zone, so it is invalid. Not invalid, it was valid, but it didn't provide any reversal. Next is this bearish unified Gartley. So let's see what happens here. It is a stop loss. I suppose it is a stop loss. So what we have is this downtrend. We move here, then we have that movement, and then we move to the downside. Okay guys, now it's not a downtrend because we then have a higher high. What I mean is that we should make our decisions after the candle closes, and instead of this lower high we install a higher high. Basically it is an outside bar that installs both a lower low and a higher high. It is not a reversal in this case. What we should do, we should wait for some further price action, and it happens here, and here we have it obvious. Movement to the downside, no doubts that we have it this way, yes. Okay, delete. So what we need to do, we need to stretch our Fibonacci, enable 50%, and after that we were triggered here. So we then go enable our ATRs, and we hit our ATR. It is minus 35.1. What was potential take profit? It could be 36.1. We have minus this. Okay, good. This one is nothing. Another unified Gatli, a bull one. What is the price action after completion? It is not an uptrend. Then we go lower. It is not an uptrend. Then we go lower, and this looks like an uptrend here. Just watch this price action. We moved higher, then we moved lower, and potentially we moved higher at this high. I just need to measure them. Yes, this high is higher than the previous one, so we have our lightning pattern. Okay, so this candle triggers us into the trade. Our stop loss is this. Let us zoom it out. We just move lower, lower and lower until we hit our stop loss. Potential profit could be 37.1. It was stop loss. Okay, probability, average risk reward, expectancy, it turned to a small one. So the expectancy here was 0.55 and the expectancy here was 0.31. Aussie dollar, although we have a positive expectancy, we do not have the best result. Let's continue further. Nothing here. The next pattern is this. Okay. We start from here. We have an inside bar. We should move it this way. Okay. Then we stretch it. And here's the retracement of 50%. 3 ATR above, 3 ATR below. We do not test our low, so we didn't touch the close of our low. We simply go higher and higher and higher, and then we go even higher and we hit the stop loss. Potential take profit could be this 34.2. Three large stop losses. The next opportunity is this unified Gatli. So what we have it this way. This is initial movement, stretching the fibs. The low of this candle says 51.580, 51.580. It was touch and reverse. Okay, we just executed at this candle, and what was it? What was the result? The result was this. This is one ATR as well. So we moved here, we hit one ATR, and we also exceeded this high, which enables that trendline mode. Oh man, it shouldn't be this trendline mode. Okay, and the first candle that closes is this bearish, and obviously we'll have a breakout. It is 6 pip profit. We could potentially make 33.9. versus 6 pips, and it equals to, no, it is this. And now we continue. We made 382 profits, so we do not re-enter. Another trading setup is here. Then we move lower. Just look at this price action. So we move it this way, then we move it higher, like this, and then we move it lower. So we have it this way. That's why we stretch our Fibonacci's from here to here to measure 50%. Just next candles or so, they trigger our entry. Then what do we have? This candles installs a new lower low. It means that we should draw our trend line. The trend line was respected, and we installed a even lower low. 1 ATR is hit. And then we close above this trend line. This is not a close, this is not a breakout. Here we spiked that through, then went to the downside, and this one is an obvious breakout. So at this time we had it minus 9.1. Minus 9.1. And potential reward could be 27.9. The next opportunity is this one. After we close this was restretched, then we go higher and we stay below that reversal. Well, yes, it's okay. Technically it is okay. So what I mean is this movement. 1, 2, 3. Yes, it's enough to install a downtrend. We didn't hit 50% from that, but from these green candles. Then we delete. This was our entry. here is that ATR, and then we install a lower low. It means that we should plot a trend line. Okay, and this is nothing. We spike that through. This is what closes above the trend line, and this way we had this 3.5 winner. What was the potential win? It could be 35.7. Okay. The next pattern is this Cipher pattern, and I suppose we should have several attempts. Okay, the attempt number 1 is this one. We have this, we have this, we have this. A downtrend, simply stretching fibs, looking at 50, triggered on the next candle, and what we have here, we move sideways and then higher. Need to examine, then we move higher, and we do not hit the stop loss. After that we reverse and we exceed our initial low, which is this, and this means that we should plot our trend line, not accelerated but simple trend line. Okay, and look at the next price action. We'll move lower, take our first ATR, then we move higher and we close just at the trend line. We do not violate it. It is not a breakout, just a test. And then we close below, and then we move even lower, so it is the second, and we hit our how is that called, initial profit objective. So in this case we simply stretch an accelerated trend line from the last test of primary trend line to that initial profit objective. And what do we have? We have this 50%, then we go here, and then we close above our accelerated trend line, and this is a winner of 28.4, and potentially we could make 52.2. 28.4, and it was a win. So now another pattern, nothing, nothing, nothing. This unified Gartley looks good, very straight and clean. So we have these 3 green candles, they symbolize an uptrend. Then we have this at least 50% pullback. Okay, we place our ATRs, so the pullback continues lower, and our stop loss was not hit. Then we exceed our initial high, that's why we plot our primary trend line, and then we also hit the 382. That's why we should plot our accelerated trend line. Suppose it should be this way. Okay, and then we move it higher, higher and higher, and close it here. Almost total body of this candle is outside of that trend line. So from here to here we have 27.0. Potentially we could make 38.7. Now let's continue. 0.87. Then we have this cipher, and okay, we have a trading opportunity within this cipher. So what I mean is this downtrend, we move it to the downside, to the upside, to the downside. Stretch. Okay. 50% triggered on this candle. On the next one. Three ATR goes here, and what we do, we just go to hit our stop loss. So the potential take profit could be 49.2, and the stop loss was minus this. Now continue. This was the cipher. Next one is this unified Gartley formation. Okay, zoom it in. And look at this price action. From this low, we first go to this high of that candle, then we go to this low, and then we go to this high of this candle. So we maintain a higher lows, and also we install higher highs. That's why we draw our fibs, enable 50%, and then we draw the ATR, and you see immediately after that we started the movement to the downside, but we didn't hit our stop loss. So the reversal started, and at this point we exceeded the high. That's why we should draw, how can I draw it? Maybe it should be something of this kind. I think it should be something of this kind. Something like this. now 1, 2, 3 candles, all they are above the trend line. Okay, then after that we should delete this and this. We move higher, 1, 2, 3 ATIs hit, we break even the trade, and then we move higher, even higher, and we hit our 382. So starting from this, we draw our accelerated trend line, and it is drawn much faster, much more clear situation, because we touch the primary trend line. Here we have some prominent low to draw the accelerated trend line. And look at this high momentum candle closing below the trend line. So we just calculate number of pips. We had 32.7. And the total number of pips potential could be 100.8. It could be a very large winner. Okay. Do we have next opportunity? Okay, yes, we do. We should first exceed this low, and we exceed the low here. And then we stay within the frame of our pattern. Okay, I think it was a 3 ADR stop loss. Oh no, nope, it was not. So we have this trading opportunity, then we have a 50% entry. Yes, you see that? And then we install a higher high, which enables that trend line. It looks ugly. This one is too. Okay, so which enables this trend line, and we exit at this candle close. So we have 9.7 minus 9.7, and potential profit from this line to 618 could be 121.2. $9.7 minus 9.7. Okay, next, can we re-enter lower? Well, we can if we stay within this invalidation limit, and yes, we stay, so we can re-enter even lower. Let me zoom it in and examine this situation. So we exceed our low here. So what we have initial movement, then we have equal lows, and then we have a higher low. This is not good. Then we move it here. We have initial low, high, we then have a higher low, and then we don't have a higher high. Okay, then we exceed even further. We have our initial movement, we have a higher low, and then we have a higher high. So starting from this, we should look for a 50% pullback. Next candle does not give us any 50% pullbacks, but this one does give a 50% pullback. So we enter here at this 50%. We place our ATRs at this level, so when we hit our, what is that, high, yes, when we exceed the high, we can plot our first trend line, and it is a primary trend line. To me it looks very steep. The primary should look this way. Primary trend line. It should not look this way, but okay, it doesn't matter. Let us stay objective. You see how steep is the primary trend line. It shouldn't be this way. Primary trend line should be somewhere around 50%, 50 to 45%. It looks more like a accelerated trend line. If plotted from here, it would be better. Okay, we had that primary trend line. Let's stay robotic, let's stay mechanical, and let us exit exactly at what place it is. I have some thoughts about the primary trend lines, how to build the primary and accelerated trend lines. So basically we need a rectangle which is 5 ATRs size, and this rectangle should be 60 candles. 33, 4, 5, 6, 7, 8, 9, 10. So you see 60 candles is very far from that. Okay, 5 ATRs and 60 candles. Now you see it. So this is a primary trend line slope. It should be this. You see, and if we place it here, it moves this way. And as for accelerated trend line, when we don't have any points of reference, yes, this should be to 30. So we'll go to 30, same distance, but 30 pips. Okay, from here to here. And here's the slope of that accelerated trend line. And you can see how ideal these slopes are, basically. Even without points of reference, only having the slope of these candles, you can see how good they work. So if we use this rule for primary trend lines and accelerated trend lines, then we maybe should reback test all that from the very beginning. Because I was using primary trend lines according to price action, according to this bars. I suppose all of them had that. So you see this primary trend line has a slope that is steeper than the accelerated trend line. Okay, I'm just having doubts about that. We shouldn't close it here. No way. I don't want to close it here. And actually what happens, we hit the take profit, and if we calculate that take profit, it is extremely huge take profit. It is 145.2. And this time we hit this and it recovers all our losses. Okay, then just let's have a consideration of this type. If the primary trend line becomes steeper than the slope of accelerated trend line, then you should not use them according to this price action. You should use it according to some slower price action, not to get that steep angle. I hope you understand what I mean, because based on the slope of the trend lines, it is not good for a primary trend line to be like this, almost vertical. In majority of cases it goes this way, and accelerated trend line goes this way. So you see, we sometimes we have that conflicting information. The slope of the trend line shows that we should have slightly different movement, and the price action has says that we should have another movement. Maybe this is a discretionary thing about that. This is a subjective thing about trading. But my experience says that primary trend lines shouldn't be that way. So just I didn't have that exact rule for primary trend lines that they should be this in this situation and that in this. Well, starting from now I will have that rule, of course. I will think it out well, how this rule should be uttered, how it should sound, and then of course it will be applied in my trading. So what do we have is this: downside, yes, upside, downside. Very simple. When you have that red candle, green candle, retracement, red candle, continuation. So just stretch our Fibonacci, find 50%. It is here. From here to here, and then we exceed our low, and now let's apply our rule about these trend lines, primary trend lines. We should stretch our primary trend line this way, yes, but let's measure it. First of all, let us draw our ATRs. Then, while we have our ADRs, let us have 60 candles. 67, 4, 3, 2, 1. Okay, let's zoom it in. And let's have our ideal primary trend line that has 5 ATRs, 60 candles, and its slope should be this. So this is our ideal primary trend line, and you see it ideally matches the price action. So my experience is not lying. It ideally matches the price action. Of course, this trend line is also okay. It is not very steep, but it is somewhere in the middle between the accelerated trend line and primary trend line. It is also okay, but this one is ideal. And look what happens. We never violated neither of them, and we first went to this take profit. Of course, we've been cutting our stop losses, it is obvious, and then it moved simply to take profit. So in this situation we'll have 41.8, and it was 41.8. It is an obvious winner. And we elevated to new highs. And that's cool. We now have new highs on our equity curve. Okay. This didn't complete, and we go to this one, very small unified Gartley, but it hits the target, I suppose. Two red candles, lower lows, lower close, lower highs. It is downtrend on minor time frame. 50% is this. So we just move and hit this level. Okay, there is no need to draw any trend lines, this one or whatever, and because we obviously moved to take profit like a waterfall, even gapping to the upside, to the downside. So this was a 16.6 winner. Moving even further, this unified Gartley has broken C to D leg, and this cipher's movement started earlier, that's why it is a broken here. This one maybe there is an entry. Okay, just examine what we have. So we move it this way, then we move to the upside, and then we move kind of sideways, and then we'll move lower. Well, yes, we have a downtrend. It is a downtrend, at least technically. Looks like sideways, but technically it is a downtrend. And after that, what we do, we enter. Here's the ATR, and price moves to stop loss. It is minus. What is potential winner? What could be potential winner? 35.0. Now we hit a retracement. Okay, broken C to D. This unified Gartley is what? We start from here, it goes higher, and then we move lower, so we don't have any trading opportunity. Then we move from here to higher, and then we'll move sideways, and this is the first high low. Okay, we don't have opportunity to enter that. We don't have uptrend. This is the first high, then the second, the higher low, and then we don't have the higher high. If only we could have a higher high, then it would be okay. Next higher high appears here, but we didn't have a retracement to get involved. Okay, another unified Gatli. Well, pretty obvious. So we move lower, higher, and lower. That's it. Didn't hit 50, didn't hit 50, and we hit 50 from here. Okay, then we just entered, place our ATR. What price does? It simply moves to stop loss. It does no retracement, no cutting losses, nothing. Once we had full stop loss, we do not re-enter. Don't. 82.1. Full stop loss. The next opportunity is this unified Gatli. What is the price action after we complete this pattern? Pretty much sideways. So basically we have it this way, then we have it this way, and then we install our low. Perfect. This means that we should stretch the fibs from here to here and enter at 50% retracement. And what we have, the open of this candle is above our 50% retracement, so we even have a better price. Okay, then guys, what do we have? We have movement lower than our initial high. This means that we need to plot our primary trend line. Okay, let us build an ideal trend line. So this is the ideal trend line. According to this slope, we'll move here, here, and here. And this is the candle that breaks it. Break and close above. Cut our loss by 1 ATR because we hit that. Yes, this is the one. And we have minus 0.9 pips. Potential take profit could be this. $90.2. Okay, the next, I will save it. So this is the trend line, if we need it. Okay, so the next opportunity looks this way. So we move lower, we move higher, and then we install a lower low. Not this candle, but this one. Let us zoom it in. We should stretch our fibs. And this candle, yes. Okay, move lower. And this horizontal line should be that. Okay, cool. So what it should be? It should be this. Price moves higher, retraces to let me enable these ATRs. Okay, we get involved and price moves lower to this. We hit one ATR. That's why we cut our loss at least by one ATR at this candle, and then we move higher. Oh, by the way, we also test the low, initial low, because we retrace far enough to hit the lowest close. That's why we need to place our primary trend line. And when we break this trend line, of course we've broken it here. Total candle is outside of that. It is 16.1, minus 16.1. And the total pattern 83.2. Okay, so what is next? After we had this trade, price moved higher like this, and again we had that trend, entry trend. So what do we have? We have this candle moving lower, yes, upside, downside. It is a downtrend. So we stretch our Fibonacci, we then stretch it back, and this candle hits the 50%, so we move it here. Our entry is this. Then we place it ATRs. This one hits the first ATR, this one the second ATR, and almost 3 ATR. So we should cut our loss by 2 ATRs. And as we have our lower low below the initial low, yes, we should plot this primary trend line and exit on this trendline break, and the trendline break happens here at this candle. And what we have that our stop loss that was cut is the first one to be hit. So the stop loss is 11.7. One ATI is left, it is 11.7. And potential take profit could be $94.5. These three were within one pattern, 31.70. Okay, what we have? Next candle does the same, and we already have three opportunities. If I risk something else, then I will retreat. I will risk my whole then I will risk my total thing. If my total stop loss is 35 pips and three trades that I took here was 31.7, so I should not take the fourth trade, otherwise I would exceed my maximal stop loss. Shouldn't be taken. But it could be a winner at this movement. Next trading opportunity is this. So we just move here. Then we go higher. Obvious downtrend all the way to hit 50%, and this we have a retracement to 50 to execute our entry. And then what happens next is this. We stretch our ATR. Let's build a rectangle as well. Okay. This is primary. See how price action respects this angle. Okay, so what happens here? The first move to the upside, one ATI against us, then we move to the downside, exceed that, primary trend line is applied, then we have this movement. Basically, even if we plot our accelerated trend line here, we first hit the thread 2 and before the trend line is broken. Oh, the 618, sorry. We hit first the 618. It is an obvious winner. Of course, we were cutting our losses. It is routine to cut that. 43.4 is the win at this pattern. Was a take profit. And we recover a good portion of a drawdown. Okay, next one is the Cipher. It seems to me that winners finally began. We had so many losses. Initial movement to the upside, obvious uptrend. 50% retracement. Okay, entered here. This is our ATRs, and we go lower and lower and lower and lower, but we do not hit our first ATR. Okay, after that we go higher and higher and higher, and at this candle we exceed our first initial high. So this means we should plot our primary trend line, and let's draw the primary trend line. It should be drawn this way. We'll be plotting ideal primary trend lines. 1, 2, 3, 4, 5 candles, 60 candles, 5 ATRs, 60 candles. Oh, this way we should move to the upside this time. Delete, and then we'll plot it here. You see how primary trend line is respected, and then we get accelerations. So this is the price action, and it was respected again and again. This is not the angle that appeared from some random calculations or some random, I don't know, accidentally. This is something that I was testing and testing and testing, and I have these angles as the most common ones. And of course, after testing this primary trend line, the aim of this primary trend line is to give a support before price accelerates. After that test, we should accelerate, and we obviously have that acceleration to the upside. Okay, so what we had here, primary trend line was not broken. Starting from this, we should plot our accelerated trend line, yes? Starting, because we hit that 382. If we hit the 382, we should plot our accelerated trend line. To plot an accelerated trend line, we need the angle of 30 candles, like this. This is the first requirement. This is the angle, and then we need a price action to touch the primary trend line. We should plot our accelerated trend line after the primary trend line is tested. So initially it is this. Way before that trend line was broken, we have this 61A target level. $33.5. Okay. Here's the unified Gartley. What we have here, no downtrend, but we have downtrend here. Okay, so what is this? What is this price action? This is a downtrend, minor downtrend, of course, yes. We measure 50%, and we enter. Then we enable our ATRs. 3 ATR lower, 3 ATR higher. Okay, then let's also enable our trend lines. Okay, the primary trend line is 60. Okay, so why do we need the primary trend line? Because of this. We first installed our lower low, and then we cut our stop loss by 1 pip. Yes, and then we reverse and break our primary trend line, which gives us how much? 4.7, minus 4.7 pips. And the total potential was 81.1. Okay, cool. Now we have the next opportunity from here. Minor downtrend starts from this, and we need to zoom it in. Okay, this low does not take the 50%, nothing. This one takes it. Okay, we move higher and we trigger our 50%, either this or that. Okay, and this means that we need to install our ATRs. Okay, we have these ATRs, and then as we make a lower low, we should draw our primary trend line, and it is this primary trend line. It was broken by this candle. And also look at this situation. So we moved higher, we cut our stop loss by 1 ATR, then we move lower and we cut our stop loss by 2nd ATR, and here the stop loss of 1 ATR was only hit. Only 1 ATR because of cutting the loss. Okay, 1 ATR is 11.7, and potential win could be 16.95. Was minus. Then we have another opportunity, slightly higher, but it takes place outside of the invalidation level. Okay. A unified Gartley. It looks this way. It completed. Okay, then we had our initial thrust to the downside. It looks this way. We didn't have 50 here, then we move lower. Okay, this is our 50% entry. Then we move it higher and higher. We hit -2 ATR, then we move it lower and lower, first ATR, and then we install a new lower low. Basically we also hit the IPO, which is the accelerated trendline mode. So if we stretch the fibs, not the fib but the trend line, the ideal accelerated trend line slope is this. So we should exit at this trend line break. It happened on this candle. -5.4 and the total result potential was 39.7. Okay, after this we have another opportunity after we close that slightly higher. I suppose here we have a downtrend, two red candles, then we have this movement, then we have this 50%. Let me delete this, and then we move slightly higher, and then we reverse. We move one ATR, then we move sideways, and then we move lower and install a lower low. Once we install a lower low, we should draw our primary trend line. Okay, let me do it. How can I draw my primary trend line? I can draw it this way. I'll stretch the fibs to 60. Not the fibs, but my rectangle. And I will draw it. So this is the primary trend line that moves here. Price moves higher, then it moves even higher. Of course we are cutting our losses, lower and lower and lower. This is the first cut. Then we'll move lower, hits rate 2, this is the second cut, and because we hit rate 2 we should plot our primary trend line, and it was broken here at this breakout candle, so we had it 2 pips winner. And potentially it could be something 49.5. Let us move on. A Cipher, nothing here. Unified godly. Well, it is good, not invalidated. So we have this uptrend, then we aim at this 50%, entered, Okay, and what happens here? We install a new high, of course, 1 2 3 at this candle, so that's why we delete 1 2 3 and the trade is break even after we move it this way. And of course we should draw our primary trend line. Let me draw it on empty space. Accelerated trend line, sorry. We hit the 382. So ideally it looks this way. But the steeper it goes, it is better. Obviously, price action moves here. Okay, this candle breaks it. We didn't hit our 618 target. We have this breaking candle, minus 4.2. And potential take profit could be 60.3. Okay, what was the highest? 252. 252. Broken C to D, nothing here. This one is a potential trading opportunity. So many trades on Aussie dollar. Only tested 5 years and already so many trades here on 5 years, 55 trades. Euro dollar has 100 trades for 20 years. Dollar yen has 43 trades for 20 years, and Aussie dollar has 55 for 5 years, so it should be 200 when I finish. Okay, initial it was this. Then we spike our entry with this movement to the downside, and we get involved into the trade. So this is the movement. It hits the first ATR, second ATR, and then finally it hits the IPO. Let us draw that ideal trend line. Should be 30 candles. Okay, and it should be diagonal. So what we have is this one, and we broke that to the downside here. So let's calculate minus 14.4 as exit. But I'd better draw it this way, of course, and the same candle is here, minus 14.4. The candle was large. potential take profit was 53.0. After this, price moves lower, then we install that price action of an uptrend, then we have 50% pullback entry, so we are here at this open of this candle, and then the ATRs, and 1, 2, 3 we are out of this trade. Stop loss 69.7. It is a stop loss. Well, enough for today. I will record a continuation video for this tomorrow maybe, but I hope you understood the set of rules, the approach that I was testing today. Not the best win percentage probability, but the average risk to reward turns into positive. Overall a positive strategy with expectancy of 0.11. Not the best expectancy on earth, but still it is good. And look at this equity curve. If compared to euro-dollar, it is a bit volatile, but still it is good. I think we are to hit more winners because recently we mostly had some losers. We had a losing streak of this, we had a losing streak of that, and losing streak of this, 5 losses in a row. That's why we have so small win probability. Just hit another winning streak and the win probability will stay above 50%. Okay, I will record the second part of it tomorrow. Until then, good luck and good trading. See you there.